We warmly welcome the participants of today's webinar on Qatar VAT. Friends, as all of you are aware, that value-added tax or VAT as it is called is a critical important terminology which is used in the context of taxation. Before we discuss on the concept of VAT, it is important for all of us to understand the background, that is what is the concept of VAT, what are the key concepts in value-added tax, what are the likely issues, because as far as value-added tax is concerned, friends, please note that VAT is not a tax change, but rather it's a business change. It is going to impact your entire business operations, and that's why it is critical for all the business entities and the owners as well as the team members to understand the concept of VAT. Additionally, at the end of the session, we will also discuss what are the important steps which all the participants should take to be VAT ready. So let us proceed. Friends, when you look at the term taxes, I think all of you are aware that government typically needs taxes to run the government and incur various expenditure which the government typically incurs on infrastructure as well as security of the particular country. Typically, you can divide the taxes in two baskets. One, a direct tax and another, a indirect tax. Direct taxes, as all of you are aware, is typically a tax which is levied on your income. So, if somebody is having an income of $100 and he is incurred during the course of doing the business an expenditure of say $80, in that case he will be required to pay a direct tax or income tax or corporate tax only on the net income, that is $20 in the example which we discussed. Now, why we are trying to highlight the fact that direct taxes are typically on the net income which is earned by the organization? Because when you look at the indirect taxes, the most critical aspect is that indirect taxes are levied on the gross income of an organization. So in the same example which we discussed, the gross income or gross revenue of the organization was $100. So typically in such cases, VAT or GST, if it is applicable, it will be applicable on the gross income or gross revenue, that is $100. And that's where it becomes very important for the organization to appropriately understand the concept of VAT before value added tax is introduced in any country. Now, friends, the concept of VAT has been a matter of detailed discussion in the last few years in particularly Gulf. When you look at the Gulf economy, major revenue of all the Gulf countries typically flows from oil sector or oil related sector. However, over the last few years, you would have seen that the oil prices have dropped, and that's why it has created a practical challenge for most of the Gulf countries as to how to leverage the revenue which is earned from oil related sector and how to incur the various expenditures which is required to continuously develop the infrastructure within the country. And that's the reason most of the Gulf countries, including UAE, Saudi Arabia, and Bahrain, have till now introduced value added tax. Now, as all of you are aware, that in Gulf, typically there was no VAT or it is typically known as no tax zone, or typically it was not subject to any indirect taxes. However, even the IMF had continuously recommended that Gulf countries should consider introduction of VAT. And that's why, in line with these continuous recommendation from IMF as well as in line with the government thought processes on the part of various Gulf countries, the government of UAE, Saudi Arabia, as well as Bahrain recently introduced VAT. And accordingly, in line with the concept of VAT, even in days to come, as all of you are aware, Qatar is likely to introduce value added tax. When you look at the concept of VAT, what is most important for all of us to understand is VAT is simply a concept which taxes everything under the sun. So practically all the transaction, all the economic transactions which are likely to be undertaken in the country of Qatar now are expected to attract a VAT. Now let us understand this concept in much more detail in the next few slides. Friends, the concept of VAT is typically known differently across the world. In some countries, it is known as value added tax, whereas in some other countries, it is known as goods and services tax. India, one of the largest countries in the world, introduced goods and services tax from 1st of July 2017. But before that, more than 160 countries had already introduced a value added tax or GST in their respective countries. VAT, you would be aware, is not a recent concept. It was introduced in 1950s, and over the last 5 to 6 decades, it has become one of the most important source of revenue for the governments across the world. And that's why most of the governments are now giving more importance to consumption related taxes such as VAT rather than income related taxes such as income tax or direct tax. As I mentioned that VAT is typically applicable on consumptions. So whenever a consumer buys say a laptop, a mobile, a pen or anything which is required for him to sustain his living, he is expected to incur even additional tax, and typically in the Gulf the rate is 5%. So he is expected to incur additional tax of 5% on his consumptions. So practically one can say all the taxpayers or all the citizens or all the residents in the country would be subjected to a consumption level tax such as VAT. But does that mean that all the consumers or all the people who are resident in a country are expected to pay taxes to the government directly? In this regard, it is important to note that typically VAT is paid indirectly through a supplier or a manufacturer or a service provider. What it means? It means that the consumers are expected to pay the amount of taxes to the supplier. So, for example, when you buy a mobile, say you buy a latest phone, and when you buy that cell phone for say $100, and if the VAT at the rate of 5% is applicable on that phone, typically the supplier will charge you $100 for the phone plus 5% VAT on that particular phone. So he will collect from you $105, and then out of that $105, he will keep the $100 as his income, and $5 he is expected to make payment to the government as value added tax. Now, though conceptually it appears very simple for the supplier that he just expected to collect the tax and make the payment to the government, but in this regard, it is important to note that the supplier would also have, that is the in the example, the person who is selling the mobile for $100 or cell phone for the $100, he would have also incurred some expenditure to keep his business ongoing, and in the course of incurring those expenditure he would have also paid value added tax to his various vendors. So in that case, the concept of VAT says that whatever expenditure you incur, typically the VAT which is paid on the expenditure is allowed to you as an input tax credit. That is, on the VAT which you pay on your expenditure is allowed to you as a set off against your output liability. So in the same example which we discussed, if your output liability is $5 on the $100 mobile phone as a supplier, in that case, the supplier, if he has incurred expenditure of say $80, and on that $80, I am assuming 5% VAT would be paid by him. So it would be $4 on $80 at the rate of 5%. So he would be required to make payment of only $1 to the government. So in this example, he will collect $5 from the consumer. He will set up the $4 which he has incurred on the expenditure, and he will make net payment of $1 to the government. So this is the concept of input tax credit. Friends, we will discuss about this concept in more detail in the next few slides. But before that, it is important for us to understand that VAT is not only a tax change, but rather it is a business change. Because VAT is not as simple as just leaving 5% on your expenditure. The VAT concept or VAT, once it is introduced, is expected to impact on each and every function of your organization, be it your finance and accounts team, be it your sales and marketing function, be it your procurement, contract, commercial function, supply chain function, then including your team members who are handling currently the accounting or finance related function. Your ERP is expected to get majorly impacted because of VAT. Additionally, there would be numerous compliances which you are expected to meet under VAT. And let us discuss now how VAT is going to impact your businesses one by one. When I mention about finance and accounting, friends, as all of you are aware, typically all your chart of accounts, your accounting process, your accounting entries are typically mapped in your accounting system. Now, whenever you are going to sell goods, when once VAT is put in place in the country, you are expected to charge 5% VAT over and above the basic price. In some cases, the prices are expected to be inclusive of VAT. So accordingly, you will have to draw a chart of accounts to ensure that you make or pass appropriate accounting entries capturing the VAT which is liable to be paid to the government. At the same time, if you have incurred VAT on your expenditure, you are expected to capture that VAT also so that it is readily available with you when you are doing a set off at the month end. Additionally, VAT is expected to increase the working capital requirement for the organization, and that's why it is important for you to understand the cash flows which is likely to increase because of value added tax. So, that is broadly the finance and accounting related impact on your business, which is more or less understandable for most of the accounting team members. But when you look at the sales and marketing function, which is typically handled by the sales team, herein it is important for the sales team to understand the impact of VAT. Why? Because in the next few months, most of the sales team member would be interacting with the customers. Now, the customers are likely to request a clarification or they are likely to ask various questions to the sales team members. And that's why the sales team members need to understand the impact of VAT appropriately. We can share with you when we were implementing VAT for few of our clients in other countries, we had even conducted trainings for their sales staff, their marketing staff, their team who was directly continuously communicating with the consumer as to what message they should pass on to the consumer, because consumer during the VAT transition will typically have numerous questions because they would be worried about the fact whether the prices are likely to go up, or they might say that the prices are expected to be inclusive of VAT. So that's where you need to ensure that your sales team is appropriately aware about the VAT impact which is likely to have on their function. Additionally, procurement team, which is typically engaged into onboarding of various vendor who are supplying various goods and services to your organization, they should also be aware about VAT impact on the procurement function. Friends, please note that typically an organization of large size might be having more than 100 vendors. Now, these 100 vendors are expected to issue VAT invoices to you, and that's why it is important for you as an organization ensure that your contractual terms are appropriately defining whether the prices which the vendor has quoted to you are inclusive of VAT or they are excluding VAT. Additionally, during the transition period, there might be numerous challenges which are likely to crop up. So, as an organization, you need to foresee those challenges and appropriately ensure that these challenges are pretty much addressed. Further, friends, most of the cases it has been observed that supply chain strategy needs to undergo a major change because of VAT implementation. What we have seen in other countries that typically the kind of supply chain strategy which you are having, that is importing the goods in a particular country and then using it for local consumption, or importing the goods in the country and then exporting those goods outside the country, or third strategy could be that you are importing the goods from a particular country but the goods are never ever getting part of your country, they are directly being exported from say China to US and you are just playing as a middleman. So in that case there could be different VAT implications, and that's why your supply chain needs to be appropriately mapped. And we need to understand how VAT is going to impact your businesses so that your supply chain, if it has to be revalidated, revisited, if the supply chain needs to undergo a change because of VAT, then you can appropriately take the steps. And because typically supply chain strategies involve a detailed commercial discussion, these changes typically happen over a period of months. That's why it is important for you to initiate the changes at the earliest. Additionally, friend, when you look at the change management, beneath the organization, you might be having total team strength of say 100, 250. or might be 500 or 1000 people. The entire organization need to understand VAT at a broad level basis. Maybe the finance, sales, procurement, IT team would be required to understand in much more minute detail and including the impact of VAT on their business functions. But at the same time, the CEO, the MD, the business owners, the various HR team members, they need to understand VAT at least on a broad level. So you need to ensure that you carry out appropriate VAT sensitization training for your organization. Additionally, I think the most important change which is likely to happen because of VAT introduction is the impact on information technology or ERP system or accounting or your various IT systems. Therein, you need to ensure that the system is geared up to capture the VAT component on your income as well as expenditure. Additionally, the system should gear up to generate various reports which are required. The most important takeaway from various VAT implementation which you have done across the world is that your IT system should typically automate various processes so that your team, your accounting team, finance team can focus on taking various critical decisions rather than investing substantial amount of time in putting the data in place. Additionally, friends, VAT is expected to increase compliances for most of the organizations because most of the organizations till now were only subjected maybe say corporate taxes, and that's where the companies who are expected to obtain VAT registration, the entities who are expected to obtain VAT registration, they will be required to file their returns. Typically, the minimum VAT return period is a quarterly VAT return period. In case of large entities, the VAT return period can even be monthly basis. And that's where the compliances may increase for your organization, and you need to have an appropriate team member who is expected to look after these compliances. Plus, in days to come, the VAT authorities might even carry out a VAT audit. And that's where I think all of you now agree that VAT is not a business change, but rather it's a tax change. Friends, now the next important question which you would be having in your mind would be what should we do if VAT is going to impact our business? I think as we discussed, the most important steps are one, you should initiate trainings within your organization to understand what is the concept of VAT. There need to be appropriate deliberations on the concept of VAT within the organization. You need to ensure that you form various groups within the organization. So, for example, there might be one group which is discussing VAT, wherein various team members, maybe one team member from sales team, one team member from purchase team, another from finance, another from IT team, they are sitting together, debating, deliberating on VAT, and then in turn, all these team members can conduct training for the seniors or juniors. Additionally, in the process of training, you can also take support of a VAT expert who has already implemented VAT across the world in few of the countries. So you can leverage on his experience of VAT implementation. So he can share with you various insights, various implementation challenges which he has faced during VAT implementation across the world. Second important step is you need to ensure that you improve your systems. Most of the time we have come across that the ERP IT system are typically legacy system for organization which they had introduced maybe 10 or 20 years earlier. In such cases, typically these legacy or old system they are not capable of implementing VAT because they do not have this kind of VAT or tax function. In such cases, you might even have to think about changing to a new system, changing to a new ERP. And in such cases, this becomes a very big decision for the organization because can you live with the old system which is not or cannot be configured with VAT, or you need to go for a new system which can be configured with VAT, or you need to run both the system parallelly for some time, and there you will need substantial amount of resources which you need to commit from your organization side, and that's where improving system could be one of the most important thing for your on your radar. Finally, as an organization, you need to ensure that you undertake a holistic VAT impact analysis on your entire business operations. How VAT is going to impact your business. Typically, you can split the impact into three baskets. One, whether the cost of operation for your organization is going to go up or down because of VAT. Second, whether the working capital for your organization is going to go up or go down because of VAT. And finally, what are the compliance related requirements which as organization you need to carry. So these three important parts you need to broadly understand by carrying out VAT impact analysis. To carry out a VAT impact analysis, you can take support of a team member or you can take support of a consulting organization who has done VAT impact analysis typically in the Gulf region. So that would be a recommended step for you. And finally, in case as a company or entity, you are able to understand that, okay, there are few likely challenges which are going to crop up because of VAT, then you can make suitable representation before the government or tax authority in the region or in the country to highlight the likely challenges for your business operations and request for suitable clarification or appropriate measures or provision in the VAT laws. So friends, with this, we are through with our today's webinar on VAT. Friend, this webinar was first in the various webinars which we are likely to conduct in days to come. So please keep yourself glued to the Zoho webinars on Qatar VAT, which wherein we are going to discuss various practical challenges which are you are likely to face because of introduction of VAT. So with this, myself Pritam Mahure, I sign off from the webinar for the day and I look forward for your participation in days to come. Thank you.